All right, you guys, this is your uncle. We're going to cover a lot in this video, so make sure to just stick around for everything. I'm going to go through the ocean wave system. I'm going to go through the sexy analyst simplicity system for my chart analysis for this up and coming week. I'm also going to go over news events and other things like that just to make sure that we all are aware of what's potentially coming up. I do normally do a Saturday video for just what my previews of what happened the previous week. It was Easter holiday, so I was out with family. On Sundays, typically I do news events just so everybody's aware of what news can impact your trades this coming week, which we have several of them coming up. But again, that was on yesterday and it was Easter, so I was with family. So what I'm going to do is combine all of this stuff together. I'm going to go through what I'm looking at for this week, also what happened last week. I'm going to go through news events and stuff like that and a couple other things to sprinkle in. Also, just an update for my copycat family. Please listen to this. Very important. Two important updates. For my copycat family, we should have a solution for you guys for the C Trader, because I know a lot of the prop firms are switching over to C Trader. And so we are going to have a solution available very shortly in about a week or two. So hang tight on that. Just hammering out some details on that, but I'll keep you guys in the loop on that. Number two, for those who want our trading systems on the MT5, those should be available by the end of today. So if you're interested in the MT5 versions of the ocean wave system, the sexy analyst, the simplicity system, the too easy system, all those things like that, then let me know, and that'll be I'll let you know what's happening with that. Okay, so just shoot me an email to superezforex@gmail.com, superezforex@gmail.com. Okay, all right, let's get to the charts, because again, we got a lot to cover in this video. So here's what I'm looking at. I'm going to go through each one of these pairs and just tell you what I'm seeing first from the sexy analyst, which is where a lot of you guys are marking up your charts for looking for support and resistance, supply and demand zones, and so forth and so forth. So I'm going to switch over to, let me do this just sexy simple, okay, because it got all of that stuff in there, okay. Actually, let me go and pause this here. Let me do this. Let me pause this and I'll come right back so I can, because you have all these different options in here. Let me go and show you guys what I mean. Let's go to sexy. All right, so in sexy analyst, you actually, and you can get that on our website, the sexy analyst. I call it sexy because it makes them charts look so sexy. So in your inputs, you have a ton of features that you can add or take out. So for an example, now instead of pausing the video, I'll just do it here. So as you can see right here, you got your supply and demand zones. I got them turned off. I'm going to go ahead and turn those on so you guys can see those. You can also change the colors. I got them at dim gray. So I can make one of these like white just to show you the difference. You have your outer and inner trend lines. Some of you guys who knows about that, that's very, very deep analysis method for those who are experts in trading trend lines. So you will understand what the outer and inner trend lines are. For novices, they've typically never even heard of it. But if you're an expert trader, you clearly know what inner and outer trend lines are. So you have that feature as well. And what's great about this inner trend line, it actually tells you the number of pips from the distance between one line or to the other. And so you have that. And so, and I'll kind of show you guys that as well. And I'll show you why I did what I did. But also with the Fibonacci's, you got the Fibonacci retracements option. You also have the expansion option, or you can do both at the same time, where you can have the Fibonacci expansion and retracement on your charts at the same time, or you can just have one or the other, or you can turn these off as well. You got your outer trend line. So it's got a lot of different features, your supply and demand zones, your support and resistance levels, which is right here. You can change the times on them. So it's tons and tons of built-in tools, so that instead of you marking up your charts, you don't have to do that in a click of a button. See, there you go. So this is the outer trend lines. This is the inner trend lines. And as you can see, they're dissecting. They're not the same. So therefore, at a click of a button, you can, and when they are in agreement, you'll see it because they're in arrangements. See, you can see the fingers, thumbs up, thumbs down. That's the outer trend lines. The plain lines are the inner trend lines. And sometimes they will coordinate together and give you a perspective to say, okay, these two match. Okay, here's an example of where they're divergent or different. Okay, you can see that. So the outer trend lines give you the bigger picture. The inner trend lines give you the smaller picture so that you can get a better understanding of what's happening. You see this? Overall, this was an uptrend on the bigger picture. Clearly, you can see it was a bigger picture uptrend bouncing within these zones, but within the inner trend lines is showing you there's this new downtrend this way. So you can see it that way, okay? But you can see its price broke through the outer trend line just by a bit. It may bounce and come back into the trend line and continue up, but meanwhile, inner trend line is showing you that it was starting to create a downtrend. Okay, so that's what that option is for. But again, that's more advanced. You don't really need it. So I'm going to take that off. Okay. And as you can see, the supply and demand zones, the gray and the whites are there. So I'm just going to turn that. Right, and there we go. So you can turn any one of these features off at any given time. It's up to you, okay? All right, so now I'm just going to go back to what I was doing, and I'm going to go step by step. And let me leave those on. I'll leave them on. Okay, one last thing. I like mine's grayed out on both ends. You can change the colors to whatever you want, but I don't like all the colors on my chart. And there we are. All right, so that's the sexy analyst, okay? Okay, so now let's go pair by pair real quick because, again, I got a lot to cover in this video. So this is AJ. I'm not seeing much as far as what I would be looking for early this week as far as, looking for reversals and so forth. Nothing there. This one is nothing there. It's already bounced up off of support right here, so nothing there. This one is, I don't really trade the AUD NZD. It's a sneaky pair. You'll lose a lot of trades on there if you're trying to be a reversal trader. It's a wonderful trade, and you'll see it when we get to the ocean wave. It's wonderful for ocean wave, meaning trading with the trend. But if you're going against it, you're going to lose a lot of time. So I don't look forward for that option. Okay. And this one, I don't see nothing. And I'm just going to click through them. I don't see anything yet. And it's not midweek. So, that's when I typically look for reversals midweek, but there could be some early ones because last week was so messy and the week before that was even worse. The week before that, we had all those news events that came out that caused all these different big, gigantic moves, which you can see right here, huge, massive, fast moves. Then the market was kind of in a consolidatory mood on last week. So really, it was just an ugly week for the last 2 weeks. Okay. So prayerfully, when the banks and everything open back up, because yesterday was Easter, so a lot of the banks were closed, which is why the markets didn't move. But hopefully when they pick back up, then the market will resume back to normal. We can get back to doing what we do. So this one, I don't see much either. I'm just going to keep it moving. Again, a lot of these big old gigantic moves to the downside, then retracements back up. So right now, it's just really patiently waiting for great opportunities. Nothing there, nothing there. Okay, nothing. I don't see anything. Now this one I like, okay? I see this hit support, came up, and it's retesting support. And these are the CAD pairs, see? I like that. I like that. So I would keep my eye on that one if I was you. Potential is there, okay? But nothing there, nothing there, no. Nothing there, nothing there, nothing there, nothing there. And if you're wondering, well, Uncle P, what do you look for? Come to my class on Wednesdays. It's free every Wednesday. Just come to my class every Wednesday. Copycat family, I hope you see what I'm doing. I'm letting you know this is why early in the weeks, we don't send out a lot of trades. We actually currently, let me kind of show you guys this so you guys are aware. We do have, for the CC group, the Copycat meow, meow, we do have 5 trades open right now, so not any more are going to be coming out. And again, these 5 trades are running, but they're just sitting still because, again, the market hasn't really gotten its footing yet because of the banks being closed. A lot of banks were closed due to the holiday. So that's that. But as far as the CC group, we are at 169 winners and 29 losses. So, I would love to have that loss at 0, but, it comes with the territory. So if we, look at those numbers, it's still not bad, but it happens. But 169 and 29 losses, that's not a bad record. Okay. I don't care which way you try to look at it. By the way, let me say this real quick. A lot of people come in and say, well, Uncle P, can you start counting pips? No. No. See, the problem is that when you're in the copycat group, we the providers, me, Dr. Elvis, and Miss Jenny, we can actually trade the way we actually are trading on our portfolios. And when we're trading on our portfolios, not all of us even care about pips. Like, for an example, I know for sure Dr. Elvis can care less about a pip. He actually counts a daily amount of money that he wants to accomplish making. Okay. He has in his head, okay, I want to make this amount of money. And it doesn't matter how many pips it takes. I don't care about the pips. I care about the amount of money. And when that target is hit on the amount of money I want to make for that day, I may even close the trades out just to be able to get out. And as I have been telling people for the longest, one of the biggest things I want you guys to do, and I'm going to go through this while I'm talking, because I still don't see anything. This one may have some little, it's another CAD pair. It's sitting on support right here, but I still don't like that setup. I don't see nothing there. Okay, that one's not bad. I like that. Okay, sitting outside. Okay, that one's okay, potential. And this one, it's already bounced up off of support. See how fast I'm going through these pairs? See, I'm already just going right through them. Nothing much to see here. Nothing much. And that's the indices. Oh, that's Bitcoin. Sorry, wrong pair. All right, let's get over here and let's get to the ocean wave. So as you can see, there's really not much to look at, okay? Nothing much to look at yet. But let me finish my point. My point is, let me say this real quick so everybody's clear. So what happens is with retail traders, they're taught to look for pips. So every conversation is how many pips. But as I have been challenging you to help people to think differently, think about it. If you were inside Chase Bank, who does trade currencies, okay? I'm actually following a person who used to work for Chase Bank, and they used to trade currencies for Chase Bank. When you hear this person talking, if they don't, now that they're dealing with retail traders, they're talking a little bit more about pips. But when you're looking at talking about banks who's moving millions of dollars, they don't count pips like we do. They don't, I did 10 pips. They don't do pips. They look at percentages and wins and losses. So they look at, okay, every QOQ means quarter after quarter. WOW means wow, or it means week after week. Did we do better last week percentage-wise than this week? Okay, YOY means year over year. Did we increase our profits this year over last year? See, they look at profit margins, percentages, and wins and losses. They don't really go pip by pip by pip, because what happens is that puts you on a scale of thinking every single trade has to be a winner. Every single trade, I got to pip. Oh my God. Retail traders is wearing me out. I'm being honest, just wearing me the hell out, because I'm trying to teach you how to think bigger and better. But you have these thoughts in your head that your brokers told you to learn, and you're refusing to change your thinking. And as a result, this is why the retail family is not making money. But yet you demand to be taught and continue to keep thinking small. At what point do you want to think bigger so you can get bigger? As long as you keep thinking small, you're going to have small. It's a great place to start. But if you realize that the big institutions aren't thinking that way, and you want to get bigger, then you have to do what they do. And you can't keep thinking and doing the same things you've been doing. It's a great starting point, but it's not the finish line. Now, is there a right or wrong way? No, there really isn't. It really isn't. But you realize that when the bigger people get, the less they talk about, oh, I want this pip, that pip, this, unless they're professional scalpers, which I only know very, very few who are professional scalpers who can do it long term. Most retail traders are scalpers, and they're getting their head toe up. And I've been saying that for years, and it's still happening. 80 to 90% of retail traders lose. So if 80 to 90% of retail traders are not making money, then at what point can you say, maybe I need to be quiet about what I want you to do, and let me become a listener? Let me become a student to learn, what are these people doing differently than what I'm doing? Because I'm learning the same thing that the other 80 to 90% of the people in this group are learning, and we're all losing. And yet these group over here are doing something different, and they're prospering. Well, number one, I ain't tripping off no freaking pips. Some trades will maybe 10 pips. Some trades may be 40 pips. I don't give a flying fart about pips. I mean, to explain it to you guys, yes, I'll follow and tell you pips. But technically, when it comes to you really trying to pay your bills, I can tell the electric company don't. Well, do you want to pay me in pips? They don't talk pips. How much money? You get what I'm saying? So when you set a financial goal for yourself, you don't really care about how many pips it took to get there. Some pips, it may take 10 pips, it may take 40 pips. As long as at the end of the week, I hit my financial target, I'm good. So please back off with demanding me to report to you how many pips. That's retail talk. When you come over here to the copycat group, you're no longer in a beginning class. And we're not going to go backwards just to appease you when in essence, all you really need is, are we making money? Because when you do a withdrawal or pass that prop firm, are you caring how many pips you did accomplish to pass that prop firm challenge? Are you worried about how many pips you made to pay your bills? Or are you worried about how much money you made? Do you see the thinking? It's different. It's different. It's different. So I can take a trade, and if I go kind of heavy on it, I can do 5 lot sizes, and I can make several $100s on 10 pips, and I'm done. I can close the trade out early. Are you understand what I'm saying? I can close the trade out early. I'm not tripping because I made my financial goal. It wasn't about the pips. It was about the goal. Everybody understand what I'm saying? Okay, because this comes up so often. When we're in other groups and we're teaching retailers, yeah, we'll talk about pips. But if you're going to come over to the copycat, welcome to grown folks area. This is where grown folks play. Okay, and what we look at is as long as let me share this, and then we get to the copycat. I'm sorry, to the ocean wave real quick. Let me minimize my head so you can see this. The goal is, as professional traders, the goal is I need many, many wins so that it absorb any lost trades that is inevitably going to come. It will soak it up and we can still be profitable quarter after quarter. That's the thinking process. I don't care how many pips it is. I don't care. So for an example, if I lose one trade at 60 pips, okay, I understand that. That is problematic. Nobody wants to lose a trade with 60 pips, but maybe 3 of these or 4 of these or 2 of these have already taken care of that 60 pip loss. And so therefore I still got plenty left over in the bank. And it's kind of like, here's a surprise bill that came up. You didn't expect the bill. That's what a loss is. You didn't expect it, but it happens. So I've paid. I got these surprise bills that came up, 29 of them, but I had won or made 169 different trades. Some were big, some were small. So what? It was 169 of them. Do I have enough to absorb the 29 losses? That's the goal. And if I do take on 29 losses out of 169, therefore, if that's the case, I should have something left over, which means I'm going to be profitable quarter after quarter. No matter how many losses, I'm going to be profitable quarter after quarter. Do you see the difference? So pips don't really matter to me. That's micromanaging my account. Pips, well, okay, I did this pips and this pips. It don't matter to me. Do I have enough up here to take care of this down here and still have leftovers up in this pot up here? There's only 2 pots that I care about. The pips don't matter. The pots do. Okay? All right. Enough of that. Let's get on to the next thing. Let's go to Ocean Wave. Let me know if that made sense. Shoot me an email or whatever, comment below, whatever. Okay? Anyway, let's keep it moving. So this week, let's go to the 30-minute. I like looking at the 30. To be honest with you guys, this is one of those weeks where the market has to pick up volume first. There's really nothing. You can see consolidate. Oh, I like this. Oh. Now this could go up a little bit higher. This could push. That could pop. Problem is just no volume. The market is not moving. It's still dead. The market is open, but it's just haven't happened. It's still having a sleepover from Easter. But that's a nice setup for an upside move. Okay. So far, I only seen maybe one that I like. Euro Swiss look like it can start heading downstairs. Not bad setup. I like that. Okay. All right. A lot of these, what I always do for the people with the ocean wave, I love checking the other side just to make sure that it's not created, it hasn't dropped so hard to where it created a double bottom and potentially could pop up on you. So yes, this is abnormal. See all this jiggity jaggedy? This is what I meant, y'all. Nothing there. Nothing to see. See, this is flat consolidation. Nothing there. So I'm just encouraging you guys, when the markets are like this due to holidays and news events, just be patient. Don't try to push it because you're just basically giving your money away. Okay. You're giving the money away. Okay. See this? This is flat. That means nothing really going on. Don't be in a rush. Don't be in a rush. Wait. So we're going to have to wait for volume to pick up. We're going to have to wait. Look at that. See, this is what I mean. You see this? Just nothing. It's flat. Just nothing. Okay, like a surfboard or somebody with no booty. I shouldn't have said that. Flat butts. Okay, just flat butts. Okay, just nothing. You ain't got nothing there. See, flat butts. You see that? Just flat. You ain't got nothing. No cheek meat nowhere. It's just flat. Okay, so as you can see, this is the S&P 500. This is gold. Gold has already shot up astronomically, and it looked like it's pulling back to the main wave. Just nothing. Okay, so the only one I saw that I would like would have been this one. That's the only one. But again, there's no volume, so it's not moving. So in closing, let's get to the news events, and then we'll be done. If this video is helpful, please let me know. I want to make sure that I'm always providing some good information for you guys. Let me do this. All right, and let me bring up this. Let me copy this and bring it on the screen for you guys, and we'll do the news events, and that's that. All right, so here's the news events for the week. What I'm looking at, the Euro on Monday, which is today, they have their PMI and unemployment numbers, but again, no volume. AUD has the minutes. I will be very careful of this. This is the interest rate minutes, which means that they could be discussing future interest rates. Depending on what they say, it could cause the market to do a little bit of spiking if later on this evening, but we'll see. Euro comes back, and Euro is heavy this week with news. Okay. You'll see it here. 1, 2, 3, 4, 5 times this week with news because it's a Eurozone. So it's on Monday. They come back out with their PMI and CPI numbers, so that could cause some spiking. GBP with PMI numbers, that's production numbers. Okay, customer CPI for me, I call it the customer inflation numbers is what I call it. Okay. Then you have the inflation rate coming out on Tuesday with the Euro. Jobs report on Tuesday for the USD. This could be just an early precursor to Friday's non-farm payroll on Friday. So a lot of times I normally never paid attention to it, but since it's election season, they really pushing for jobs. Sometimes they call a little spike with the US dollar on tomorrow. Then you have inflation numbers coming back out again for Euro. So Euro is going to be the one with the most news this week. Now, Fed Chairman Powell is coming out on Wednesday. I don't know what he's going to be talking about, so just be aware that that's a possibility to cause a little spiking. Euro is coming back out with their production numbers again, so be careful of that. US dollar is coming out with jobless claims. See, look all week long, 3 times. Jobs, NFP, which is jobs for USD. Okay, so jobs is going to be the theme of the week. You got CAD coming out with their unemployment numbers, and then you have CAD coming out with their production numbers on Friday. So there's some little blippers in there. The biggest news event of all would be NFP, non-farm payroll, or Fed Chairman Powell, in my opinion. Euro is going to get hit with a lot of news, so just be aware of that as you're trading for the week. So anyway, I'm going to go ahead and be done with this video. Let me know if this video was helpful to you guys. I know I combined a whole lot of different things together, but it is what it is. All right. Because again, I'm going to spend time with family on holidays to make sure that, they're not being neglected. And so that's the reason why I did everything today. All right. Love you guys. See you in Wednesday's class. Talk to you soon.